All right, welcome for this medium-term analysis, weekly analysis. So we will start with Bitcoin as usual. Last week I had this flat prediction, flat indication, good confidence index. It's going quite well. It's not moving that much around that line. Pretty flat. Let's see what do we have right now on Bitcoin. So I've widened the analysis window. Okay, 134 days, which is a lot, and that to capture these three movement, 1, 2, 3 movements. All right, I think having this up movement and then this correction is quite important. All right, let's see curve by curve, what do we have exactly? This one is quite well fitted. Yeah, we have two misses, one here for sure, and one here. Otherwise, it's really nicely fitted with in the future, so low volatility, uptrend, breaking this level here, and waiting for it to break up again. Okay, next one is an okay fit, at least technically is okay with downtrend in red here, downtrend in red, and we have the same in blue with up movement here. But it's more or less the inverse that the first one, meaning that we have a little bit more volatility, all right, but a downtrend. I would not be very worried about that. This seems like to be a response, a down response of this quick up movement. So if we are in that case here, that would be a little downtrend. All right, let's switch to the next one. A weak feet, weak technicals. It's not really the same but it's a breakout. Simply, clearly, that's the case of a breakout. For sure, if you see that with Bitcoin, we can have 100% up. All right, next one. All right, this is a bad fit. I will delete that one. This is a weak fit, but the technicals are okay. All right, here there is more amplitude here, but still it's acceptable. It's acceptable. With low volatility, up movement, it's more or less the same case as the first curve. All right. Next one is gonna be a no. I don't think we're in the same. I don't think we are in the same case. There's a miss here, and the correction here doesn't really have the same shape. All right, I will delete that one. This one I will delete that one too. This one too. This one too, and this one too. All right, we only have 4 curves. So we're going to do a long-term type-like analysis, watching every curves and deducing from here, because the average is just up. It's not very telling. I can see that we have 3 over 4 curves that has a flattish behavior over 25 days. All right. The best one is the first one. Clearly, we have to check the behavior that we get a low volatility from now on, and an uptrend to be exactly in that same case. All right. For sure, the outlier is this one. If we break the resistance here, it's up to the races. All right. So it's still possible. The last one is a bit like the first one, this one, and the second one. Well, that's the kind of bearish, flattish case, a little bit down, not that much, with more volatility than the first one and a slow downtrend. All right. But for now, I think I will stay on a flattish behavior for the next 25 days. So it's more or less that, with a confidence index of maybe not 40, but going back to 20, it's gonna be, I think, better. And we will have to watch carefully the curves and what's going on, and try to see what's the next move. Okay, let's pass to oil. Oil, where we have this head and shoulder like here. We broke it down and there was an up movement the last 3 days. All right. I had no indication. Okay, let's see what we have right now. Okay, so I did a short-term analysis, like 45 days, just the down period, and it was indicating me a short-term bottom. All right, I'm not going to do it again here. Let's concentrate on this wider analysis. So I'm shorter term, I'm waiting for a bottom. All right, let's see what we have right now. So this is a 108-day analysis, medium term, within the medium term time frame, to have these two movements up and down the whole, well, we can say head and shoulder pattern. All right, quickly. So the first one, it's an okay fit. This one is okay. This one is okay. The last part is arguable, clearly, but I'm still going to keep it. This one misses some technicals, mainly because of that goes up to this resistance here. So we are really not in the same case. I will delete that one. I will delete that one too, because the shape is too far away from our reference. This one's okay. This one's okay. This one's okay. This one okay too. And this one is more or less, because there's a lot of volatility, but okay, I will keep that one. So as usual on oil, it's quite fuzzy. It's not really clear, but we can, I think we can aim for a low point during the next 15 to 25 days. It's what we have here. It's already more or less past, but it's what we have here. Okay, it's what we have here. Here too, low point during the next 25 days. Here is a counter example where it's going up right away, right now. These two, it's already going up right away. Here we have a low, not at 25, but more 35 days. And here too, there's a low at 35 days. All right, so on the here on the average, we don't really see it because there's four curves that are counterexamples. But I think we can aim for a low point at something like minus 5% during the next 15 to 25 days, and then count on an uptrend from here. So if we switch to the TradingView chart, that would be a completion of the head and shoulder here that would go down to the 70 level, 69, 70 level, and then go up again. All right, with a 40% index of confidence. All right, we'll see. We switch to the SP 500. I had a flattish indication with a 50% index of confidence. It's going quite well. It didn't move that much for now. All right, let's see. What do we have right now? Okay, so I'm aiming for, I asked for a 150 days analysis, which is very long, but I wanted to capture the whole up movement here and the trading range stabilization period. All right. The first one has, well, a nice fit. It's quite okay. Next one is okay. Next one is okay too. This one, well, the last part is not really nicely fitted, so I think I will delete that one. This one is, yeah, average, but okay, I will keep that one. This one has an okay fit, this one is okay, and this one is okay. So the best fitted curve is really the first one, and we actually have, yeah, that's pretty nicely fitted, more or less all of them, mainly the first one. And well, they aim more or less for a down a downtrend of minus 2.5%, something like that during the next, I would say 20 days, and then coming back to the the 0 point at 50 days, which is not that much movement. All right, if we switch back to trading view, I think I will not even put that on the graph because minus 2.5 is just going back to this low point here and going up again. I think I will even keep my line here. So not that much flattish behavior. We'll still have to see and watch carefully the development if that really rhymes with the curve that I have here, but pretty flattish behavior for now. Okay, if we switch to the euro, right now I had an up indication here with a very low confidence index. It was doing quite well until the job report who put the euro down. That's okay. My analysis is not made to forecast exogenous events. All right, what do we have right now? Growth indication is a downtrend. All right, we will refine that. I'm on a 48 days analysis. It's short, but the euro is quite fuzzy. I capture like 1, 2, 3 movements, which is okay. Let's see what do we have curve by curve. This one is okay. This one is more or less okay, but all right. This one too. This one too. This one too. This one's okay. This one is too fuzzy. I will delete that one. This one does have less short-term volatility and more amplitude, but okay, I will keep it. This one is okay, and this one is clearly too fuzzy. Okay, so what do we have at the end here on the statistical analysis? So flattish for 10 days and then down behavior. As it is a bit fuzzy, I won't go into each curve, and because it's fuzzy and the analysis is quite short term, so we should not go into each curve. It's not going to be helpful. All right, let's put that on the trading view graph. Here it is. So 10 days of flattish behavior and 10 days of moving down, a very low confidence index. Okay, let's switch to the pound. The pound, I had a down prevision, a down indication, and it was not going well. It was going up and just before getting the job report, who got the price up to my indication. All right. And it was a low confidence index. All right, let's switch to my similarities analysis. On the pound too, we have a 48 days analysis, which is quite short. It's quite fuzzy either, like the euro. But okay, let's go through each curve. This one is quite okay. This one too. This one too. This one is going to be a no because here is the last part is really not similar, and I like to focus on the last part, that the last part is more similar than the rest. All right, we will delete that one. This one is not very nice either. This one is okay, I will keep it. This one's gonna be a no. This one's gonna be a no. And this one's going to be a yes, all right, and this one's going to be a no. So yeah, for sure it's very subjective, and you can draw your own conclusion with your own curves. You have to trust my analysis. All right, conclusion down, like 1% over the next 20 days, low confidence index. Let's put that on the trading view chart. Here it is, 20 days, minus 1%, and low confidence index of 10%. Let's switch to gold, where I had a flattish expectation. with a good confidence index for now it's doing okay. It's quite flat. All right, let's switch to my similarities analysis. So I changed the window to have 83 days of analysis, a bit longer than last week. Capture this up movement and then this correction trading range here. All right, let's see what do we have. This one is okay. This one is okay for me. This one is okay for me too. This one is not. There's a big miss here, and the shape is really not the same. All right, bye bye. This one is acceptable. This one too, even though there's a miss here, but okay. This one is okay. This one is okay too. There's a miss here, but the shape here is more or less the same. This one, not the same shape either, but I think that can be representative. That can be okay. This one is going to be a no. All right. Conclusion, well, more or less the same, flat and not very volatile with I will get a 30% confidence index because the more it's not very volatile, the less it is going to be less volatile, meaning a period of low volatility ends up with a period of high volatility. So at some point, we are going to have a breakout somewhere. This is why I put not 40%, I pass from 40 to 30% of confidence index because I guess that at some point there's going to be some movement. All right, but for now, no expected behavior, no expected big breakout. Okay, let's switch to copper. So copper, I had a down indication and then up here. For now is going well. I don't know why I haven't put my confidence index. All right, let's see what we have right now on my similarities analysis. I've widened a bit the analysis to 67 days, all right, to capture this upward trend. And yeah, this up movement here is always a problem. It doesn't appear in the past, so it's never going to be really similar. But okay, let's try to do an analysis. This one is okay. This one is more or less, but okay, I will let that pass. This one too. This one's gonna be a no. It's really not the same shape. This one is more or less okay. This one is gonna be a no. Okay, this one's gonna be a yes. And this one no. This one no. And this one no. All right. So here we can see on the analysis graph, we have like 5 to 10 days of flattish behavior and then up. Okay, so more in detail, we can see, for example, here that we have a period of low volatility and putting a base would be an up signal, which is also the case here. It's a bit more similar here. So low volatility and gently up, it can be the sign of a big up movement. Here, it's low volatility short term here, but really we can see that there's a downward price behavior and it's going down, up again a bit, correction, and then down again. It's really bear market classic. All right, here another example of a behavior. Putting a bottom up. Yeah, it's really characteristic. Here we can see a flattish behavior with a big down, but then big up, and then it's quite volatile. So the market is hesitating. So on average, we have this flattish and then up, but it's an average. And there's a lot of volatility, so there's a lot of possibilities. All right, if we switch back to the trading view chart, the prediction from last week, it's still more or less in line with that, having a a flattish behavior for the next 5 days, and then uptrend. So, okay, that's it. I will put a 20% confidence index because the graphs are not very similar, quite fuzzy, and anyway, it's not very big movements because we have like 4%, 3-4% over the next 20 days, which is not a lot. So surely there's going to be some volatility here, and we'll see what is going to happen. For now, it's my indication here. Okay, we can switch to nat gas. I had a down prediction with a very low confidence index. It went the other way. All right, that can happen. The method is not perfect. Let's switch to my program. Okay, nat gas can be quite volatile and quite extreme in its price movements. Okay, I have a 83 analysis window, which is quite average. Let's go through the different curves. This one is okay. This one is okay too. This one is not okay because the behavior here, we clearly have a triangle here in the blue curve, but with the red, with our reference right now, we don't have the same pattern, so I have to delete that one. This one is not nice either. This one is not nice either. This one is quite okay because the technicals here are okay. Here there's an up movement here that is quite rapid, but okay, I can keep that one. And this one here is not very well correlated. It's not really really similar. Correlation is not a good word in my analysis. Okay, let's switch to the next one, which is not similar. This one is going to be a no, and this one is going to be a no, and this one is going to be a no. It's really far away here, so yeah, no. So we only have 3 curves, so low index of confidence. 2 of them are topping formation. The first one here, it's a topping formation. Here too, it's a topping formation. And here, it's just a trading range. The price is resting before going up again. So it's very volatile. I don't think I will put any indication here, but I would go for a topping formation here in the analysis. We have just a flattish trading range period. I would go for that, but for now, I think we have to wait for more data and to for me have a better analysis on nat gas. So I will delete these two. All right, let's switch to silver. Silver, I had no indication last week. Okay, let's switch to the similarities analysis. 83 days of analysis window, which is quite normal for a medium term. Let's do the selection curve by curve. This one is okay, this one is okay, this one is okay, this one is not going to be okay, this part is okay fitted, but this one no, really no. So, and I emphasize that the last part should be better fitted than the rest. So, all right, thank you, but no thanks. This one is gonna be a no because the shape here is really not the same. All right, this one more or less, but okay, this one is going to be a no. This one's going to be a no. And this one is going to be a no. The last one, yeah, it's all right for me. Okay, so we get a bottom formation for the next 10 days and then up like 10% for the next 40 days. All right, let's put that on the trading view graph. Here it is. Still a bit down for 10 days and then up again up to this resistance for the next 40 days. Let's switch to the yen. The yen, I had a down indication that is going okay for now with a very low index of confidence. let's see what do we have in the similarity analysis. So a very large window, 130 days. This to get the whole movement here and try to get rid of the volatility induced by the central bank interventions. All right, so what do we have? This one is pretty much okay. This one, two, this one, two, and this one too. All right, this one is not going to be okay. This one either, this one either. Actually, all the last one, I'm going to delete them. We only have 4 curves. All right. Topping formation, topping trading range before going up. All right. And the last one is topping and then trading range. So we have a down indication minus 5% for the next 50 days. All right, let's put that on the trading view chart. So, okay, as you can see, it's in line with my previous prediction. It's quite coherent. I will put a confidence index of 20% because it's going okay for now, so I can have a bit more confidence in this indication. And lastly, the 10-year, which was last week indication was going well, pretty well. It nearly hit the target here. So usually price movements are usually faster than my predictions, than my indications, because well, I'm basing myself on an average, and so it's normal that it goes usually faster. But well, last Friday we had the job report, which put this down, this price down to well, nearly to my long-term, medium-term indication. All right, let's see what we have right now with my similarity analysis. So 75-day analysis. All right, that's average. Let's do that curve by curve. This one is average but okay. This one is volatile but okay. This one is more or less but okay. This one is going to be a no because we have a miss here. For sure, everything that's after the zero here, we should discard it. We should not look at it. So even though that was more or less in line with this price behavior here, well, it should be discarded and this one should be deleted. This one is going to be a no. This one is going to be a no. This one either. This one no. This one no, because here you have a higher point than here in blue, but in red, this one is lower than this one, so it's not really the same technicals. I have to delete it. This one is going to be a no. All right, so we have only 3 curves up. The fit is okay. It's not really not incredible, but okay. This one is maybe the best fitted one. So I've kept that one because we have similar pattern here, even though that's after the zero line. We have a similar pattern and the volatility is quite the same. However, it's very much more volatile. So I think it's what we can expect. The last one, much less volatile, okay, but the shape is more or less the same. We can, on average, expect a 2% over the next 20 days, but I think what we can expect is more something like that. The 2% is going to be reached, but quite quickly. And well, after the 20 days, I don't really know what is going to happen. The average is a bit down, but I'm not really sure. So yeah, on the trading view chart, I think I will put that a quick up movement, 20 days up to this resistance here with a low confidence index. And yeah, that's what I'm expecting for the T-note. Thank you for watching. See you next week.